My name is Kirk Marley, Dovetail Planning, and I work with a lot of clients who have large assets and then some with smaller assets, and it's all the same to me. Your assets are important. And if it's taken you your lifetime to develop them, whatever they are, we need to preserve them and make them do what they're intended to do, whatever your objective was in creating them. But oftentimes a client will have business assets as really the major component of their estate. And if they have a number of children and they're trying to treat them all equally, it becomes difficult. How do I do that? How do I get those kids something by way of inheritance that is substantial enough so they know I love them, and I've thought about them in my planning. And so this is a complex issue because oftentimes the business assets are even illiquid, so there's really no way to divide them. And then if you were to get people who are not in the business assets, it can create a contention in the family. In fact, I would say generally it does. Even if you're well-intentioned and you have wonderful children, it's difficult. So we've used oftentimes what is called a one-way buy-sell agreement. And so we'll find the child or children who have an affinity for the business that you've created, and they have the acumen to work and to make the correct decisions in the business, have some experience in the business. And then what we'll do is we'll set up what is called a one-way buy-sell agreement, where the son or daughter, or sons and daughters, or whatever the mix is, will possibly own a life insurance contract on the owner of the business with the agreement that they will receive the death benefit. The kids are going to own the policy, they're going to be the beneficiaries, but they'll have an obligation to purchase assets from mom, who will inherit the business. Now, what that does is it does a number of things. First of all, it washes some tax off of the long-term capital gain on the appreciation of the business. And there's a lot to this, so it depends. But generally, you'll get a step basis on the value of the shares or the interest, and even the inside value of the company assets if it's an LLC partnership and you have the correct filings. And then that spouse, let's just say it's the wife, she will sell that asset to the kids. Now she'll have the death benefit, which is what she wanted anyway, so she has some security, and her income, future income, is not tied to the undulation of the business income. So she has that. She didn't pay any taxes because she sold an asset that had a step basis, and now the kids have the business. And so you may, let's say you have 4 kids, and now 2 of them own the business and 2 of them do not. Well, it does a number of things. First of all, the 2 children who own the business can go back to the other 2 and say, we purchased this business from mom. And there's a different perspective for the kids who did not receive the business as an inheritance, when they know that their siblings purchased the business. So that also created some liquidity in mom's estate. And now mom has some passive income through her investments, investing the value she got from the kids. And then she leaves the balance of those assets equally to all of the children. So now all of a sudden we have everyone treated equally. The kids who have the business, they purchase the business. The perception is amazing, and it creates family continuity, or gives at least the best opportunity for family continuity. So again, remember, Dovetail is about succession planning, asset transition planning, estate planning, keeping in mind fundamentally or foundationally the family continuity. That's what we're trying to achieve. And it is not easy. As assets transition, if you're a business owner and you ask around, you'll find that some of your contemporaries have not been as successful as they wanted to be in that aspiration. So that's what I do.